Hey guys, what's up? How's it going? Robin here. Welcome back for another video on the channel. In today's video, I'm going to be sharing with you guys my stock portfolio, and I'm going to be showing you guys the stocks that I'm going to be adding inside my Canadian dividend-based investing portfolio. So if you guys are brand new to the channel, I built this portfolio back in January 2020. Every couple days, I like to do a couple videos showing you guys which stocks I'm buying and giving you guys updates on how we've been able to grow the portfolio over the past little while. So once again, guys, if you guys enjoyed this video, please be sure to give it a big thumbs up. And remember to subscribe to the channel if you guys want more dividend investing based content. Alright, let's jump into my portfolio spreadsheet and let's see how my portfolio has been performing since we started it way back in January 2020. Alright, so the first thing we're going to talk about before we jump inside the portfolio is just give you guys a quick little update on the dividend income earned and the monthly contributions for our portfolio. So if you guys are brand new to the channel, I like to do this quick little update here and there just to show you guys how the portfolio has done and how we've kind of built this portfolio from scratch when we started in January 2020. As you guys can see on the left side, we have the months. And like I just said, we did start this portfolio in January 2020. Was month 1, and we are currently on month number 12, which is December, so it's almost been a full year since we built this portfolio. And in the second column, you guys can see the dividends earned from the portfolio. So this is the monthly income that's coming in the form of dividends. Keep in mind there is stock appreciation as well, but I'm just tracking the dividends because the stock appreciation is always up and down. And as you guys can see, this number has been slowly increasing over time as we put more and more money inside the portfolio. In November, we made $41, and December so far, we just started to get some dividends rolling in. A lot of the REITs and stuff like that pay out their dividends at the start of the month, and some of the ETFs as well. So we've already got $31 in dividends for the month of December, which is nice, and our monthly contributions so far has been $200. It's all I put in so far, but I do have a big deposit coming in from my personal account that I'm transferring, which I'll talk about a little bit later when we get inside the portfolio. But I just want to give you guys a quick little update on that. And then the total income for the entire portfolio together is, I haven't updated this since December, but at the end of November, it's about $222. So I'll probably update that in the next video. So it's probably more closer to like $230 in total that we made in dividend income. And here's the total contributions, as you guys can see. I'll scroll down a little bit just in case my webcam is covering that. So that's a quick little update on the dividend income. I like to track that just so you guys can see the portfolio growing over time. And yes, of course, we are taking all these dividends and we've been reinvesting them back in the stocks on a regular basis. So let's jump into our web software trade portfolio and let's see how our stocks are doing today. Alright, so let's go over our stock portfolio really quickly here, guys, before I show you guys the stocks I'm buying for today. So we have $7,000, $913 inside our portfolio. Our transfer from our personal account went through to our bank account, and today we put that transfer into the TFSA. So that's about, I think it was about $4,000 to $5,000 that we transferred outside our personal account that we pretty much had invested into REITs. We sold those because we're going to be transferring that into my TFSA before the end of this year, so I can kind of rebalance that and use the contribution room so I don't lose it for next year. So that's pretty much how that is going. And if you guys click on our TFSA here, we can see the total return. So in the past day or so, since this morning, the stock market has kind of just been sitting at a normal volume here, not really any big increases or decreases here. Over the past week, we are up 2% on the entire portfolio, which is $138. Over the past month, we are up 6%, which is $473. And over the past 3 months, the portfolio is up 11%. So most of our gains inside our portfolio actually came over the past 3 months. And you can see here that it's been a slow increase, that we got a nice little jump here. And it's actually been going up pretty steady for the past little while. So that's nice to see. And if we go to the all-time earnings, we can see that's a whole-time earnings of, like I just mentioned, 11%, which is $780 inside our TFSA for 1 year of investing, which I'm pretty pumped with. I'm pretty proud of. I'm glad the portfolio has done so well. And obviously, 2020 has been like a really weird year when it comes to investing. So, but kind of is what it is. The cool thing about it is all those stocks we bought at earlier prices will continue to grow over time, and the portfolio will just keep growing as time goes on. So the stocks we're going to be buying today, I'm going to go over a couple here. There's two I'm going to be buying. I'm going to be buying one Canadian REIT, and then the other stock I'm going to be buying is an actual US-based ETF, and I'm going to talk about that later on in the video. So as you guys can see inside our portfolio, we have a lot of Canadian stocks. It's predominantly a Canadian portfolio with a little bit of US stocks I'm going to start buying pretty soon here. So the stock for today, two stocks that I've really been keeping my eye out for the past little while has been RioCan, which is a REIT, and H&R REIT. Now, these two REITs, if you guys watched my previous videos, I had absolutely crazy returns on H&R REIT. I've been investing over the past year since March, basically, and as you guys can see, in the past month or so, the stock went up 20%, and over the past 3 months, the stock went up 40%. So we were sitting at like a 40% gain inside our portfolio since earlier this year. So the stock performed really well for me. It's a nice Canadian REIT. They're very, very well balanced and whatnot. Very set up to grow in the long term, and they do have a monthly dividend, which is really cool. And if we go over the past year, they're still down 34%. So I still think, this little jump here shows us that, as things start to open up and as the economy kind of gets back together, it kind of showed us that these REITs will recover. So I think that's why I think they're good buys. Like even RioCan, even after their distribution cut, I still think they're still a good stock to buy. Now, I know people are talking about another lockdown and stuff like that. I don't think that's going to happen. But even if it does, it's okay because it'll just push these stocks down. But once everything kind of opens up again, when it eventually happens, and that economy starts going in and, everything stays open kind of deal, the REITs will recover. So anybody who invested in, I think, will do quite well. Now, basically what I've been doing is I've been taking RioCan and H&R REIT and kind of splitting my deposits into them just to kind of balance it out, just in case if one doesn't do well, but they've both done pretty good. H&R REIT has done better for me, but RioCan is still up quite a bit for me as well, so it's pretty cool. So we have $226 inside my TFSA today. I'm going to spend about $100 on H&R REIT, and we're going to be putting that in. That's going to be a good chunk of the stock. So we'll go here, and I'm going to buy about, it's trading at about $14 Canadian, so we could probably buy about, let's see if I can zoom out here just so we can see it a little bit better. Estimated cost will be $42 for 3, so 4, 5, 6, 7, $99. Yeah, that's probably good. If we go with the past day, we can see that it's actually dipped down quite a bit, so it's actually trading at a pretty good price right now. I think it's a pretty good price to buy. So we'll go a limit buy, and I'll probably put the price here. Looks like it was sitting at about $14.20. It's actually going down a little bit, so we could actually put a limit buy that's a little bit cheaper than what it is. Maybe we could go like 14, 18 or something like that, and see if that price goes through or something like that. Or we could just keep it at 14.20. I mean, it is kind of starting to dip up. So let's go 14.21. We'll just put it the price it's at right now because I still think it's a really good buy. I don't really care too much about trying to do that. So we got that. We'll put this in here, recalculate it up to be about 7 shares. We'll put that order through, buy an H&R REIT. And the other stock we're going to be buying today is going to be a US-based growth-based ETF. And the reason why I want to buy more US stocks inside my TFSA is because US growth stocks generally perform pretty well. It also helps to balance out the portfolio because I have a lot of Canadian stocks with some decent appreciation and some decent dividends, but I really want some growth stocks in the short term to really kick up the portfolio, and then the dividends can kind of keep the long-term gains of the portfolio and whatnot. So my main goal with this TFSA is start to put some more US growth stocks in as time goes on. And the main ETF that we're going to be looking at today is VFE. So VFE is basically a Vanguard-based S&P 500 index. Basically tracks the Vanguard fund that Vanguard has. Now the funny thing about this fund is that it's actually the actual real ETF that tracks the S&P 500 is VOO from Vanguard. So we type in VOO. This is the Vanguard S&P 500 index fund. We can see that it's just grown massively over time. And if we go to VFE here, we type it in. VFE is actually like a Canadian version of the fund, so to speak. If we go to Vanguard index, the actual holdings inside the VFE is just VOO. It holds VOO inside of it, but it's traded in Canadian dollars. So you don't have to pay the fee, like a Wealthsimple trade, normally charges a conversion fee for buying US stocks. And this is the problem with, if you're a Canadian and using Canadian funds, a lot of places will charge you like conversion fees and whatnot, and they can range from like 1.5 to 2% depending on where you buy it from, and they can also charge it if you sell it as well. So obviously those fees add up. So when it comes to Wealthsimple trade specifically, and even like places like Questrade and whatnot, they still charge like a 2% fee for buying in USD. I think when it comes to Canadians, one of the best options you can do is just buy like a nice big US based growth index, and you can get a bunch of US stocks. And the nice thing about VFE, and you can pay it in Canadian, so you can charge that conversion fee. So over time, Wealthsimple trade charges you a conversion fee of 1.5% to buy and 1 to sell. So if you think long-term growth, if you, let's say you make like you have a portfolio of $300,000 or something, and you're paying a 3% fee off that just by buying and selling, you're losing a lot of money in the long term. So I think this is a really cool fund, and it's a really easy way for Canadians to buy US stocks. If you want like the easiest way to buy US stocks if you're Canadian, is to buy VFE. And if you're American, you could just buy VOO because you can just pay for it in USD. But this fund is done absolutely crazy well. It's up 14% this year. If you go over the past 5 years, it's up 69%. So that's over 10% average in the past 5 years. It's just a growth-based fund with a very, very low dividend yield. It's got like a 1%, I think it's like 1.15 dividend percent, which is good because dividends do get taxed in your TFSA, but because it's a super low yield, you don't get taxed that much. The management fee is super cheap, as you guys can see, or 0.08. So the actual total fee of having this portfolio is going to be like 1.2 maybe. That's what we're paying in conversion fees. That's what we're paying in taxes, and that's what we're paying in management fees. So super cheap fee for Canadians, and I think it's a really, really good fund. And yeah, it's just a really amazing fund. So we're going to buy, I think, I'm not too sure how much US stocks, growth stocks, are going to put inside the portfolio, but I'm just going to slowly buy into it as time goes on. So we have $126 left from our last trade. So I'm going to put $100, I'm going to buy one share because I won't be able to buy 2 shares. So let's buy 1 share of VFV. We'll put that through. We'll see how much we have left over. And if we have anything left over, I guess I could just put it back into H&R REIT. That'll be the plan for today. So let's go back to the portfolio. Let's go back into our TFSA and we'll go to H&R REIT here. And we have, let's refresh the page because it looks like the trading didn't calculate the trade. Sometimes you have to refresh the page here. So we go refresh. We have $42 back in. So let's buy 1, 2, 3, 42.63. Looks like we can buy it if we do a limit buy. So we'll do another limit buy for 14.21. Just type that in there, 14.21, and we'll do 1, 2, 3, and that's right on spot with how much we got. So it's perfect. That works out perfect for us. We'll put that through. It went through instantly before, so there you go. Instantly, just like that. So that's cool. So those are the stocks I'm buying for today, guys. I hope you guys enjoyed this video. I think the portfolio has done pretty well, and I'm pretty excited for to see what's going to happen going into the new year. But let me know what you guys think in the comment section. Let me know what stocks you guys are buying. What do you guys think of the stocks I'm buying? What do you guys think I'm adding US growth stocks inside the portfolio? Let me know in the comments. So if you guys enjoyed the video, be sure to once again give it a big thumbs up, give it a like, and I'll see you guys later. And I hope you guys enjoyed the video.